Hello everyone, welcome to Stock Insights. Today we're diving into NAPCO Security Technologies, ticker NSSC. Is this security tech stock a hidden gem that could skyrocket to $1,000? We'll cover pros, cons, financials, competitors, dividends, and long-term forecasts up to 2050. Stick around, let's break it down. NAPCO designs high-tech security devices like alarms, access controls, and cloud-based solutions. Its current price is around $32. To hit $1,000, it needs a 31x growth, a tall order. Short-term, it's unlikely with only 5 to 6% annual revenue growth projected. Long-term, by 2030 or even 2050, it's possible if cybersecurity demand surges. But modest EPS growth of 5.5% and a high PE ratio of 25 make it a stretch. Let's talk strengths and weaknesses. Pros. NAPCO boasts a high net profit margin of 25%, super low debt at 3.3% debt to equity, and a solid cash pile of $89 million. Its recurring service revenue with 91% margins is a cash cow, and its return on equity is an impressive 27.5%. On the flip side, growth is slow. The stock dropped 45% in the past year, and its PE of 25 is pricey. Plus, revenue dipped in Q3 2025, and competition is fierce. Financially, NAPCO shines. Gross margin is 57%, net margin 25%, and both are growing 5 to 10% yearly. Driven by high-margin subscription services. Debt? Barely there at $5 million, easily covered by $53 million in cash flow. Side incomes from subscriptions make up 40 to 50% of revenue, boosting liquidity with a current ratio of 6.74. This strengthens the balance sheet, though economic slowdowns could pressure subscriptions. Compared to rivals like Alarm.com, with 15% margins, and ADT with high debt, NAPCO is more efficient, but grows slower. Since its 1981 IPO, long-term returns have been solid, around 10 to 15% annually. Though recent volatility saw a 45% drop in the last year, investors have seen gains, but it's been a bumpy ride, with stock splits like 2-for-1 in 2022. Looking ahead, NAPCO is betting on AI and cloud security, targeting 10% service revenue growth by 2030. By 2040 to 2050, expect expansion into smart city projects. Political tailwinds like stricter cybersecurity laws could boost demand, but risks like recessions, privacy regulations, or supply chain issues could hurt. Rising crime rates, though, keep demand for security solutions strong. NAPCO pays a 1.8% dividend yield, growing 10 to 20% yearly, but it's not a dividend aristocrat due to its short history. Short-term returns look weak. Long-term, expect 5 to 7% annually. Compared to the S&P 500's 20% gain last year, NAPCO's minus 45% lags. It's similar with NASDAQ and MSCI World, though long-term it could outperform. That's NAPCO in a nutshell. Not a $1,000 rocket, but a solid pick for patient investors. Like and subscribe for more stock deep dives. Disclaimer: this is not financial advice, do your own research.